Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings to give you the real story behind the numbers. Today we're diving deep into Espey Manufacturing and Electronics Corporation's latest proxy statement. Get ready, because we're about to uncover what this means for their leadership, their finances, and the future. So Espey Manufacturing and Electronics Corporation recently held its annual shareholder meeting. This document, a proxy statement, is basically a report card for the company and a guide for shareholders on what is happening. It covers everything from who is running the company to how they're spending money and what their future plans look like. First off, the meeting itself happened on the 5th of December, 2025. They had a few key things on the agenda. They needed to elect a new director to the board for a 3-year term, ratify who their independent accountants will be for the next fiscal year, and importantly, shareholders got to vote on 2 advisory proposals. One was about approving the compensation of the company's top executives, often called a say-on-pay vote. The other was to decide how often these say-on-pay votes should happen every 1, 2, or 3 years. Now, how do shareholders actually vote? Well, they can do it in person at the meeting or by sending in a proxy form. This proxy form is like giving someone else permission to vote your shares for you based on your instructions. And don't worry, you can always change your mind and revoke your proxy before it is voted. A big part of these meetings is about the people in charge. The company has a board of directors structured into 3 classes, serving 3-year terms. This year, one Class B director was up for election. The nominee was Nancy K. Putzwall, who is already a director. The board thinks she is a great fit because she is a certified public accountant with a lot of experience in financial risk assessment, making her a valuable audit committee financial expert. Nancy Putzwall is 59 years old and has been a director since 2022. Her professional background is in accounting, working as a principal at Yuhai Advisors, NI, Incorporated since January 2020. Before that, she was a shareholder at an accounting firm from 1997 through 2019 and worked with KPMG. She has over 25 years of board experience, serving on different types of boards and chairing audit committees. Recently, she also joined the board of Rhinebeck Bank Incorporated. The other directors whose terms are still ongoing until 2027 are Carl Helmertag, who is the chair of the board, and David A. Winnell, who is also the president and chief executive officer. Mr. Helmertag has a strong background in business consulting and financial management. Mr. Winnell, as CEO, is obviously very involved in the day-to-day operations and strategic direction of the company. And serving until 2026 are Paul J. Kaur, a certified public accountant and former professor, and Michael Wool, an attorney with extensive experience in business and tax law. It seems like they've got a well-rounded board with a good mix of financial, legal, and operational expertise. The board notes that all directors except David A. Winnell are considered independent, which is important for good corporate governance. Now, let's talk about how much these directors are paid. The non-employee directors receive an annual fee of $71,000. That fee went up from $65,000 in October 2024. On top of that, there are additional fees for serving on specific committees. The chair of the audit committee gets an extra $5,000. While members of the Audit, Compensation, and Legal Affairs Committees get an additional $2,500 each. Michael Wool, as chair of the ESOP committee, also gets an extra $2,500 for the fiscal year ending the 30th of June 2025. Paul Kaur received a total of $80,500, Carl Helmertag and Nancy Putzwall each received $78,000, and Michael Wool received $85,500. These amounts include their annual fees plus committee retainers. This is where things get really interesting. Let's look at the compensation of the named executive officers, or NEOs. These are the top compensated executives for the fiscal year ending the 30th of June 2025. David Winnell, the president and CEO, had a total compensation of $655,147. This included a salary of $313,575, a bonus of $300,300, and some other compensation. For the prior year, his total compensation was $621,964. The chief financial officer and treasurer, Katrina Sperano, earned $172,314 in 2025, which was lower than her 2024 compensation of $268,348. It seems her bonus decreased significantly in 2025. Caitlin Winnell, the principal financial officer and treasurer, who started in February 2025, had a compensation of $71,325 for the partial year. And Jennifer Pickering, the chief human resource officer and corporate secretary, who started in April 2024, Her total compensation for 2025 was $260,725, including a salary of $194,096 and a bonus of $12,500. Now, the company is required to show how executive pay relates to actual company performance. They use a metric called compensation actually paid, which can sometimes look quite different from the summary compensation table due to accounting rules. For David Wanil, the CEO, his compensation actually paid in 2025 was a whopping $926,742, significantly higher than his reported total compensation of $655,147. For the other NEOs on average, their compensation actually paid was $368,233. Also higher than their reported summary compensation, this big jump is often due to how stock awards and options are valued and treated over time. Looking at the table for pay versus performance, we see the summary compensation table total for David Wanil in 2025 was $655,147, but the compensation actually paid to David Wanil in the same year jumped to $926,742. That is a substantial difference, and it highlights how the accounting methods for different disclosures can create a big gap. On the performance side, the company's net income was $8,142,000 in 2025. In 2024, it was $5,815,000, and in 2023, it was $3,677,000. So net income has been growing year over year, which is a positive sign. However, the gap between the CEO's pay and the company's net income growth is quite noticeable. While net income grew by about 30% from 2024 to 2025, the compensation actually paid to the CEO increased by about 60%, and compared to 2023, net income more than doubled, while the CEO's compensation actually paid also more than doubled, but with a significant leap in the most recent year. Moving on to the auditors, the audit committee recommended, and shareholders were asked to ratify the appointment of Withum Smith, the Brown, PC, or Withum, as the company's independent public accountants for the fiscal year ending the 30th of June 2026. They are the successors to Freed Maxick. PC, the fees for these services were $146,500 for audit fees in 2025 and $134,000 in 2024. Tax fees were also billed, totaling $20,950 in 2025 and $26,250 in 2024. These numbers seem reasonable for an audit. Now, let's talk about that say on pay vote. This is where shareholders get to voice their opinion in a non-binding way on how much the top executives are paid. The company's philosophy is to align executive pay with shareholder interests and reward performance. They noted that their CEO's bonus is partly based on financial performance formulas and partly discretionary, while other executives' bonuses are purely discretionary. They also highlighted that executives participate in the company's ESOP and 401 plans, similar to other employees. And then there is the proposal on how often these say on-pay votes should happen. Shareholders were asked to choose between every 1, 2, or 3 years. The board recommended 3 years, arguing that this allows for a more meaningful evaluation of executive compensation strategies against long-term company performance. It seems the shareholders previously agreed with this, as this frequency was supported in 2019. This section is about insider reporting. Directors and top executives have to report their stock trades to the CS within a certain time frame. The company believes everyone complied except for a couple of late filings due to administrative errors, specifically for Carl Helmertag and David Wanil, with some stock option exercises and sales. These seem like minor oversights, rather than anything more serious. When we look at who owns the company, the Espey Mfg, and Electronics Corp, Employee Retirement Plan and Trust holds a significant chunk, about 18.66% of the outstanding shares. This is a common structure where employee retirement plans, especially ESOPs, can hold a substantial amount of company stock. Now let's look at our own directors and executive officers. As of the 16th of October 2025, David Wanil, the CEO, directly owns 29,106 shares, which is about 1.6% of the company. Carl Helmertag owns 38,211 shares directly. Paul Core owns 37,081 shares. And Michael Wool owns 31,442 shares. When you combine all directors and officers, they collectively own about 5.54% of the company's stock directly. The audit committee, made up of independent directors, has reviewed the company's financial statements with management and the independent auditors. They've also discussed the auditor's independence and the non-audit services provided. They concluded that these services were compatible with maintaining auditor independence. It is also worth noting the company has a stock trading policy. Insiders, like directors and executives, are prohibited from certain trading practices like short sales or hedging. They can only trade during specific windows, meaning they can't just trade anytime they please. This is a standard practice to prevent insider trading and market manipulation. So, what is the big picture here? Espey Manufacturing and Electronics Corporation seems to be navigating its annual meeting and governance processes effectively. The company is showing growth in net income, which is a good indicator. However, the significant difference between reported executive compensation and compensation actually paid, especially for the CEO, is something shareholders will want to keep an eye on, particularly when their bonuses are tied to financial performance and discretionary factors. While the company provides a clear structure for director and officer conduct and compensation, the rising executive pay compared to performance growth, even with increasing net income, presents a potential area for shareholder concern. The board and leadership seem to be focused on financial stability and growth, but the alignment of executive rewards with shareholder returns, particularly in the context of the pay versus performance metrics, will be a key area to watch in future reports. That is our deep dive into Espey Manufacturing and Electronics Corporation's proxy statement. What are your thoughts on their executive compensation and future direction? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more insights into the world of business. And don't forget to join our Discord community for even more discussions. Thanks for watching, and we'll see you in the next video.